morning. You listen to FloorDaily.net, and I'm Kemp Harr. This morning, my guest is Santo Torcivia, an economist that tracks the flooring business. Santo, how you doing?
I'm doing fine, Kemp.
You've just released the U.S. FlooReport, the 2027 edition. It's a book you put out every year, and it's the most complete look at how the business has been tracking, and then you forecast what it's going to do in the future. It's a 360-page report, and a lot of the premise is set by some of the investments you make in reports like the Moody's Economic Report. And you cover inflation, consumer confidence, household formation, economic growth, geopolitical conflict, tariffs. There's a lot in here, right?
Yeah. We try to distill it down to the flooring industry and what impact all of that is going to have on the flooring industry. We created a market model many years ago that takes all of these inputs and forecasts what all of this means to the floor covering industry by product category.
I should mention that you got started doing this for the executives for Mannington Mills. Then
Correct.
You went off on your own, and now you offer this report to executives throughout the business on what you think is going to happen in the future, right?
That's correct. We also interface with consultants, and we talk to overseas people who are interested in the United States. We kind of get around, but we concentrate on North America. That's our focus, and that's where we feel we know it the best, so we stick with what we know.
So you've been building this report. Tell us what you think the future will bear for the flooring business going forward.
Well, we think 2026, current year, is going to be a time of adjustment, and we're going to see a very small decline this year in overall flooring business. And then we're seeing 27 as a recovery year, and then we're going to start to see some decent growth in the remainder of this decade. We look out 5 years. The outside years of the forecast are looking kind of bright. You know, there are a lot of unknowns with the war, with energy prices, with AI, with tariffs. You know, this could change depending on what direction any of these things go. It's a lot of moving parts.
I think trying to forecast what happens in Washington is a difficult job, isn't it?
Oh, definitely. And Washington has become more pervasive as the years go by. They're into everything. That doesn't make it easy because now you've got politics mixed into all this. I'm not a politician, and I don't try to gauge what the politicians are doing, but it does have an impact. You have to be observant of that. The thing that seems to be a driver in the traditional flooring industry, residential construction, is slowing. A lot of that is due to weak multifamily construction. Single family is still holding up okay, but the interest rates, the home prices are slowing everything down, and investment in multifamily is slowing much more than single family. The other thing we see, our economy is becoming Lexus and Chevrolets. You got some people moving into the high income, and you have other people moving into the low end. The squeeze is on the middle class. Everything is shifting towards upscale and base grade. That's good for people who specialize in high margin upscale products and people who can make things very cheaply, but anybody in the middle is going to feel the squeeze. The other thing that's hurting home sales is that a lot of people have low mortgage rates that they don't want to give up for a high mortgage rate, which is the case right now. Some people have mortgages in the 2.5 to 3.5 range, and they would rather remodel their existing home than sell their house and buy a much more expensive house at a higher interest rate. That's hurting the turnover of housing. It's going to help the remodeling industry, no doubt, but there's going to be pressure on new home construction. On the other hand, commercial will become a bigger driver than it has been in the past. And we're starting to see commercial pick up some steam. We think areas like lodging, offices are going to be driven by data centers. Another segment that's growing is retail, but that's mainly in these fulfillment warehouses that you see along the interstates. 25% of new retail is going to be fulfillment centers. Inflation is holding back retail. Actually, government statistics say that there are more retail closures than there are openings. That tells you the traditional retail is under significant pressure because of the e-commerce part of the business. Education should see some growth in the K-12 with government spending kind of getting boosted. And institutional should see some growth as well with transportation terminals. The government construction is going to be down. However, government workforce is down 11%. So things are changing in the industry. The drivers are shifting. People out there have to be ready to shift with it.
You were telling me that you got some new data around the size of private label branding. Tell me a little bit about that.
Yeah, we look at the channel conflict. Channel conflict is the retailers against the manufacturers. Who controls the channel? They both use the same channel, but who's going to get the leverage in that? And the way we measure that is we look at floor covering CPI, Consumer Price Index, versus manufacturers' producer price index. The theory is he who can raise prices most has the most leverage. And right now, retailers are leveraging that to a degree much stronger than manufacturers. Part of that reason is they are building out their store brands. We calculate that about 25% of flooring sales in the United States are via store brand. And that goes from Traffic Master at Home Depot, Style Selections at Lowe's. These are all sourced by the retailer from manufacturers, both domestic and foreign, and they control those brands. And when they can play around and control those brands, obviously they like that better than having to dance to the tune that a manufacturer is putting on them. The retailer is closest to the consumer as well, so he's got an advantage there. Manufacturers are going to have to look at how they're approaching this and how they maintain the equity in their own brand. I just looked, Floor & Decor spends more in advertising than the whole flooring manufacturers combined. That should tell you a little bit about the nature of this conflict in the channels. Manufacturers, to some degree, not all, have walked away from building their brands, and I think they're suffering for it to some degree now, and they will suffer for it in the future unless they do something to maintain those brands against the store brand. As before, we're seeing resilient LVT continue to be the juggernaut in the industry. Residential carpet is growing much slower and losing share, and commercial carpet is kind of buoying it up. And the other hard surface categories are growing at different rates. We're at the end of this whole thing, we're dealing with complexity, and how these things sort out are going to be important to where the industry goes in the next 5 years.
All right, Sandy, well, I appreciate your read on this. And like I say, it's a big book, so we can't go through it all. If somebody's interested in looking at the U.S. FlooReport, they can get in contact with you, right?
Correct. 610-927-2299.
Again, been talking to Santo Torcivia, a partner with Floor Focus and an industry economist. And you've been listening to Kemp Harr and FloorDaily.net.